Hello, how do you do swing trading daily chart analysis of upward large cap stocks if you are using long option long swing trading strategy? We have our watch list here and we are going to analyze 3 stocks from that list, and the first one is BKNG. To swing trade, you can use daily chart, either maximum daily chart or 1 year daily chart. But with upward long uptrend long swing trading strategy, I found maximum daily chart to give us a bigger picture of the chart, and if there is a lower uptrend line or support line, we can see it as well. BKNG. So BKNG, we purchased it already. So technically, to analyze the chart, we will be comparing where the price is to where we want to exit, since we already purchased it. So when you look at the chart, we are going to zoom. During the analysis, you'll compare the price bar, the daily price bar of the day that closed. So today is 4/4/2025, so April 4th. So we are analyzing the stocks to see how they perform on April 3rd. You do your analysis at the end of the day, after the market closed, or early in the morning before the market open. So yesterday the price dropped. That's why we have a green bar here. The closing price was lower than the morning price. The price dropped, and a green bar means the closing price was higher than the morning price. The price went up. Yesterday the price dropped. Where we bought it, we put an arrow there. So we bought it at the trend line, which you can call support line as well. But not really right at it. When it pull back making lower lows, we waited until it start making higher lows. We saw one there higher than this one. The red bar at the bottom of it is higher than this one. It's higher up compared to this one. And then we bought it at the first green bar, first or second green bar that follow the pullback, the red bar. So we bought it at the second green bar that follow the pullback. It went up for a while, and pretty much pull back. But when I say pull back, I'm talking about completely changing direction. So it came back down to the trend line again as of yesterday. So some stocks, when they reach the lower trend line and start going up, they'll go up, change direction. Like I can say this bad, they pull back. Here it pull back, here it pull back. But from here and here, even though it's pulling back, it's still going up. Does that make sense? Like the direction is still going upward. But then it changed direction, went up again, and changed direction again. So it's like 3 changes here. 1, 2, 3, 4. So some of them can do that. So at the entry line, which is the long uptrend line, to buy, you can compare the previous how the price the price movement was at the trend line previously, to see if it lingered around the trend line. Here I don't see that. When it reaches it, no, I won't say that though. So here it pulled well below it, went up, pulled to it before start going up. So but anyway, so it could do the same thing here before start going up. So our exit point is going to be the next new high, and the next new high is not, so it's not quite close yet. So right now, at some point, it was positive in the account as long as the price was higher than where we pay for it. But now the price is lower than what we pay for it, so it's going to be negative in our account. But because it's a stocks, a large cap stocks, upward large cap stocks that we could invest in long term, we could just leave a negative in the account without selling it at a loss, but leave a negative in the account until it becomes positive and start going up. By doing this as a large cap stocks, it just gives you plenty of time to get in the trade. Like, for instance, if you never purchased it before and you want to purchase it, you'll want it to see a few higher lows here before you get in. I purchased it, but again, it's giving plenty of time for somebody to purchase it again around the trend line because it pulled back to it. So when it start going up from there and you have like two higher lows, you could get in. But who knows? It could try to pull back again before it might do that few times before it has the momentum or is ready to start going up. So just giving you plenty of time. If you didn't catch it the first time, you could catch it, another time again around the trend line. But with large cap stocks, as a beginner, they don't fluctuate quickly. You're not going to lose money with them quickly, but you're not going to make a lot of money with them quickly in a short period of time either. But is a stable. Those are stable stocks that you can learn to swing trade with, and one share at a time, testing the strategy you are using to see if the stocks is a good fit for the strategy you are using. So the next one we are going to analyze is, so this one is there. If today is a green bar, I will not recommend somebody that does not purchase this stock before to buy it. It'll be good to see, okay, green bars, find another red bar and compare it to this one to see if that red bar is higher than this one, and then find green bar and then a red bar to see if that red bar is higher than the previous one, which is higher than this one. Having those two give you, some, you could say that, well, it's ready to go up, it's not going back down, then you can buy it. But do you see, I have two red bars here. This one is higher than this one, which is higher than this one, but still it turned down. So there is still a possibility that it's going to go down, but we are just trying to minimize that risk or that chances or that probability by waiting to see at least two red bars between the greens and having an upward trend. If I try to connect this to that red bar to this one, it's going to be an uptrend. Does that make sense? To see an uptrend line around the support line or the uptrend line you want to buy before you get in. But again, there is a slight chance that it's going to do this. But I have traded before in 2024 using short uptrend line swing trading strategy. That's why we have those arrows. The arrows at the bottom are where we bought them. We bought it, and the arrows at the top are where we sold them. So we bought them and sold them few days. It's short unless it pulled back on us and we had to wait. Like we bought it there and it pulled back and we stayed in the trade for a while before we sold it there when the price was higher. So the next one is BLK. Because we bought it is in our portfolio, that's why we highlighted that one. That way we know that we already purchased it. So the next one is BLK. So BLK, we have this line that we like to buy at, but right now it's nowhere near it. Yesterday the price dropped, but it's still higher up. It does higher mountain. Maximum daily chart allows you to see a bigger picture of the chart, and you can see that it does a high mountain, and I feel like it has the upside of the mountain here and could well be doing the downside of the mountain. We just like to wait for it at the valley. So it's not a buying a time for us today for this one. So the next one is BRO. And BRO Yesterday the price went up. Let's get closer to it. You can see we have multiple trend lines here that we trace to follow it at, but it reached a new high some days ago, and but pretty much for multiple days it has been going up. We have a bunch of green bars there. So yesterday it went up as well. Okay, so we bought it somewhere here and we sold it there. So that's a nice profit right there. But you can see that because there it reached a new high. In fact, it reached a new high. Yeah, it reached a new high and we sold it. But again, at the exit, you will compare how the price move around that area. So this is a new high. So when we look at this new high, we notice that it pulled back shortly after reaching that new high. And this is a new high as well. So this is a new high there. This is another one. So each time it reach a new high, it tends to pull back before we'll go up again. So for that reason, when it reach a new high here, we assume it could pull back on us. Therefore, we just want to lock in that profit. Not necessarily trying to maximize the profit, but lock it in. And this now being the lowest upper trend line that we have, we didn't really want to stay in the trade too long, thinking it's going to continue going up and then it'll pull back on us. But guess what? It continued to go up quite a bit for one full month, because we sold it on April 25 or so. The date is on the x-axis, but guess what? For one entire month, it continued to go up, pull back slightly, but still higher price than what we sold it for, and then continue to go up. So the next time we will want to buy it will still be, let's go, will be, I feel like this trend line is the support line for the mountain, for the upside wall of the mountain. Therefore, at some point it's going to be done climbing the mountain and will decide to climb down, climbing up the mountain and will decide to climb down. We don't want to get stranded there. So even though they are all long uptrend line, meaning they are longer than 1 year time frame, they cross 1 year time frame, we just don't want to get stuck at the peak of the mountain when the price is going to the valley. So, but we do have those lines, and here is when it touch base with the lowest one, and then it touch base with those. So I would prefer to buy somewhere there somewhere here. Just here is a little bit risky. Those two can be a little bit risky in the sense that it has been, going up for a while now, and I don't know when it's going to be done with it and will decide to come down to rest. We can look at the previous time that it was at this lower trend line. It went up for a year or so, and then took a while to come down as well, about a year as well to come down to it. And then when it came down to it and start going up, it has been like 2 years, it's still going up again. So I don't know how long it's going to take to come back down here. So between those two, if he decided to rest here and go up, we could buy some in case it decided not to come this lower. But when you are with long uptrend and swing trading strategy, using long up with those upward large cap stocks, that is how I do the chart analysis, comparing how the price is moving to previously to see if there is a pattern there that I can rely on. So thank you so much for your time. We thank you very much. And again, this one is not a buy either. A sell maybe if you have it, but not a buy. We thank you very much for your time. We thank you very much for watching our videos, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one share at a time, or $300 per trade, or $100 per trade. If that $100 is met the minimum requirement to open a brokerage account with a good brokerage firm, or a Roth IRA with a good brokerage firm if you have a job, and that $100 is enough to buy one share of a stock from your watch list, that's all you need to start. With long up to long swing trading strategy, when you buy at a lowest run, and then you just wait with those large cap stocks, good for a beginner to swing trade with. You just wait to sell it at the at a new high. You'll make a profit, not a lot of profit, but a profit nonetheless. And once you start making profit, you'll compare those stocks on your watch list to the strategy you are using to see if they are aligned. And the one that didn't really work well for you with the strategy you are using, you can flag them, and at the end of the year you can pull them out of your watch list, go back to your master list of those stocks you can swing trade to replace them with the one that are now on your watch list. Have a watch list of stocks that you can analyze within an hour every day. Give yourself a part-time job to swing trade, allocating 2 hours a day for that, 30 minutes to actually place the trade when the market is open, and after the market close, 1 hour to analyze the stocks, 30 minutes to record your trade and your dividend incomes from your account, because some of those stocks pay dividend, and to be on top of your record keeping of your profits. That way you'll be able to pay estimated tax for when it is due. And I have a video that I'm going to publish related to how you can pay taxes as a swing trader, like a estimated tax, but just start small, and over time you'll have a curated watch list that reacts well with the strategy you are using, because you'll customize the strategy to your liking, to meet your personality type, your risk tolerance. It's not the stocks you are going to customize, it's the strategy you are going to customize based on the stocks you are trading. But it's good to find the stocks that work well with the strategy you are using, and customize the strategy to add to the strategy your prior knowledge of other things that that can help you make that strategy better, and find stocks that work well with that strategy. And once you can start with large caps, and then you can try with mid cap to see what kind of mid cap stocks work well with your strategy, and then what kind of small cap stocks work well with your strategy, and have those watch lists. And why not, if you want, you can combine them all to find, create a list you can analyze within an hour that has all 3 cap stocks in it. Why not? If that's what you want to do, you can. And you just have your watch list. You are not going to keep asking yourself every day what kind of stock is out there that you can swing trade that day. You have your watch list to go through it. Some days you won't find anything to buy, and someday everything on your watch list may not be profitable enough, or might even be unrealized loss that you are not going to sell. And some days you'll find a lot to buy, and some days there will be a lot of stocks in your portfolio that reach new high or are very profitable, that you feel confident selling to lock in that profit. Even if it's going to continue, they are going to continue going up, you prefer to lock in that profit so that you do not lose them. But yeah, with long up trend and swing trading strategy, if you have a full-time job, it gives you flexibility now to trade every day. And then some days you have a lot to buy, and some days you have a lot to sell. So you just find a lot on your watch list that are ready for you to buy, and some days you have a lot in your portfolio that you feel confident to sell for profits. But yeah, you have those moments, but it's just not like a day trade. Even last year 2024 that I used short up to and swing trading strategy, I traded quite a bit. You can even see this one, all those arrows are buy and sells within short period of time, within like each swing. And this year I say, you know what, I'm going to try long up to and swing trading strategy, wait for the stocks to come to the trend line that are selected, and those are lines that pass by the valleys or the lows of the chart, and you just wait for the stocks to pull back to the one that you highlighted to be where you feel confident to buy. And when it start going up, you see few higher lows, you buy at the first or second green bar that follow a pullback, and you just wait until it reach your exit point and you sell. But each time before you buy and sell, compare it to it previously, how the price move around that area, whether at the previous high or at the previous trend line that it touched base with, that you are trying to buy on, to see if it stayed there for a while or if it take off from there. That way you know if it's okay for you to buy, or if you want to wait a little longer and things like that. So thank you so much for your time. For more of swing trading related videos, will you please check the playlist, check the video description for the playlist, and we have one specifically for tips on how to create your own watch list of stocks. Thank you.